Today, let's talk about a strange and dangerous financial trap. It's one I've seen destroy so many businesses that on the surface looked like they were absolutely crushing it. Understanding this paradox isn't just smart, it's essential for survival.
So let me start with a question that it sounds impossible, right? Can a business that's making a profit actually go bankrupt? The answer, and I've seen this happen with my own eyes, is a painful absolute yes. It happens every single day.
You see, this isn't some abstract theory from a textbook. It's a real-world nightmare for entrepreneurs. So today, we're going to pull back the curtain and figure out why. I promise you, by the time we're done, you will never look at the word profits the same way again. All right, to really get this, let's walk through a story. It's about a company that seemed to have it all, but deep inside its financial records, one simple mistake was quietly leading it straight off a cliff. Okay, take a look at their books. They brought in sales of 400 crores. They also spent money on a big new machine, raw materials to make their product, and of course, they paid their people. But here is the fatal flaw. Every single thing they spent money on, they called it an asset. And because of that, it looks like they made an incredible 400 crore profit. But that number, it's an illusion. And this is the absolute heart of the problem. That huge profit number isn't real. It's a mirage in the desert. It makes everyone feel safe and successful. But behind the scenes, the company is bleeding actual cash. And what happens the second you show a profit that big? Well, everyone wants a piece of it. Your employees, who worked so hard, they see that number and they want their bonuses. The government sees it and they want their taxes. And of course, the shareholders, the owners, they expect a nice, fat dividend. Suddenly, there is this massive pressure to pay out 400 crores in cash the company doesn't actually have. Because here is the brutal, painful truth. The company brought in 400 crores from sales. That's real cash. But it spent 750 crores on the machine, materials, and salaries. Do that quick math? They are actually negative 350 crores in the bank. This gap, this deadly difference between paper profit and real cash, is the silent killer. So what went wrong? It wasn't their sales team. It wasn't their product. The mistake was buried in their accounting. So let's put on our detective hats and use a very simple test to find the truth. Okay, this is the core question, and it's where a lot of people get confused. We always hear leaders say, our people are our greatest asset. And emotionally, that is 100% true. But from a purely financial perspective, is the salary you pay them an asset? Let's think of it this way. If you buy a car, even a beat-up old one, you own it. It's your asset. But if you hire a beautiful Rolls-Royce for the day, you don't own the Rolls-Royce. You've just paid for the service of using it for a day. That's an expense. It's the same with employees. A company doesn't buy its people. It hires their time, their talent, their service. The salary is the higher charge. This leads us to a really powerful rule I call the consumption test. Just ask this one question about any cost. Was the value of this cost used up or consumed this year to help make this year's money? A salary pays for work that's already done. The value has been consumed. It has to be an expense. If you truly get this, your financial thinking has just taken a massive leap forward. Now pause here for a moment, because this next part is so important, it could literally save a business. An expense is not a bad thing. Think of it as a recovery opportunity. It gives you the right to recover the money you spent before you even begin to calculate a profit. Okay, so if an expense is value that's been consumed today, it begs the question, what then is an asset? Look, every smart business owner wants to recover every single rupee they spend. The only real question is when. An asset is simply a cost that you plan to recover, not all at once today, but slowly over many years in the future. I want you to picture it like this. Assets are just expenses sitting in a warehouse, waiting for their turn to be used. They're not gone, they're just stored. And that warehouse, it has a name. It's called the balance sheet. So let's follow the journey. You buy a machine, it sits in your warehouse, the balance sheet, as an asset. Then, for 1 year, you use it to make your product. A little piece of its value gets consumed. You take that little consumed piece, move it out of the warehouse, and put it on your profit and loss statement as an expense. That process is called depreciation. You're just recovering the cost of the machine one piece at a time. So after all this talk about warehouses and classifications, Let's come back to one simple, powerful truth you can always count on. Profit is an opinion. It can be debated. But cash in the bank? That's a fact. Cash is reality, and cash never, ever lies. Okay, let's get back to our company that was about to go under. Now that we understand the rules, let's go back and fix their financial statement and see what happens. Here we go. Look at this corrected P&L. Sales are still 400 crores. The amount of money spent is exactly the same. The only thing that has changed is our understanding. We simply move the 50 crore salary cost from the asset column to the expense column where it always belonged. And just like that, the profit becomes a much more honest 350 crores. The power of this one change is incredible. Before, the business was under pressure to give away a fictional 400 crores. Now, by correctly calling the salary an expense, the company first recovers that 50 crores it spent. It protects its cash. The real profit available to share is 350 crores. This simple shift in thinking literally just saved the company from going out of business. You see, this is more than just accounting. This is the roadmap to building a business that can last. It starts with correctly classifying where your money goes. Then you use expenses to recover your costs. By doing that, you protect your cash. And that is how you build a powerful, sustainable company. So if you take away only one thing today, please let it be this. First, recover your costs. Then and only then do you celebrate your profit. By truly understanding this, you've just learned what 90% of business people will never fully grasp. You're now part of a very rare group.